If you've watched any of my videos, you would know by now that I absolutely don't claim to know what's going on, what the future is going to be. But what's interesting is it's always good to see what people who manage money think. And, it's just so interesting that those people turn out to be very wrong or very right, just the rest of us. So they have, maybe a little bit more than 50% chance to be correct, yet they deal with a lot of money. And this is not a shot at anyone. It's just the way it is, unless you claim to have some sort of other knowledge or a model that has produced a lot more correct analysis and predictions than incorrect. A lot more by that I mean 70+% more correct than incorrect. Then you can't really claim. But let's see what some of the people in the know, or again money managers, think about it. And this whole video is gonna try and figure it out, what the current mentality on it is. So Hamish Douglass, in this particular interview, he is, I think, what is the title? Um, Non-executive chairman, non-executive director. I think he's like a investment chief officer for Magellan Financial Group Ltd. This is their performance in the last 12 months, just so you know. And they manage, let's see how much they manage. Well, either they manage, or in any case, the market cap of the Magellan is 8.75 billion, so $8,750,000,000, and they're 42nd largest company in Australian share market. So let's see.
I think anyone who's been investing in the last 50 years has a playbook here. This is such an unusual time.
I kind of tend to, who am I to disagree? But what is it? Unusual times. A few of my videos, well, I had to say predicted, but the next crisis, I said it wasn't going to be what we remember it to be in the past. That the GFC, whatever caused that, was a bit of a mystery. We know what caused the dot-com bubble burst, because it was just exuberant. What's the word, the phrase that was used for it? Irrational exuberance. That was the dot-com bubble. But then we know what, September 11, what that did, in war on terror. So there were planes, hitting the towers and all sorts of stuff going on. But this time it was completely different. It was what they call now an invisible enemy. If you've watched some of the kind of reviews of the interviews, they call it invisible enemy. So how do you defeat an invisible enemy? If it's invisible to most of the ordinary folks like you and me, they can tell us, well, it's there, but you can't see it because it's invisible. But we'll go ahead with our agenda anyway. But that's a whole different video. But yeah, they can keep it going for as long as they want. They could turn it on, turn it off anytime they want. So that's kind of a bit scary.
Billionaire fund manager and investor Hamish Douglass. He says the massive stimulus injected into ailing economies by central banks and governments has probably warded off a depression, but a recession is unavoidable. And so is a big pullback in markets. I spoke to Magellan's Hamish Douglass by Skype. Hamish Douglass, last month you went from 5% to 16% cash in your global equities fund. What will be the signal for you to start deploying that cash again?
Remember my question? So they've upped their holding in cash, meaning they've taken the money off the table. Safe asset for now, cash ready to deploy back. My previous video and those videos asking for your favorite channel to go there and say, at which point will you say we need to do something with this cash? I am going to personally do something with this cash I have sitting in bank accounts. When is that? So let's see what this multi-billion-dollar company worth investment officer has to say.
Well, the first thing I'd say at least is nobody knows what's going to happen next. I don't know what's going to happen next. A lot of people have very strong opinions about what's going to happen next. I don't think anyone who's been investing in the last 50 years has a playbook here. This is such an unusual time. And I think it's really going to be dictated by the healthcare side of this. We could have a V-shaped recovery, and at the other end of the spectrum, we could have a depression, or we could have a form of recession in between. And nobody knows what that's going to look like. at the moment. So until we have some more clarity on the depth of the economic downturn, and that's a very wide spectrum at the moment, we think some caution is required at this point in time.
All right, so that's kind of a general caution required until we have more information and depth into the current situation of the economy. The problem is that the market is a discounting mechanism, so the market would have already moved up with the anticipation of the good news, so you might be a little bit late. So how do you read into what is going to become news in the future? That's how you become a good investor, if you're ahead of the knowledge potentially, or do you just ride that uptrend? Once it's established, you just jump on it and ride it as long as and as far as you think it's going to go.
Do you think you'll be increasing your cash holdings?
Well, we can only go to 20% cash in our strategy. As you said, we're around 16. We could even be a little bit more than that at the moment. We feel very comfortable where we are at the moment.
So how do you value a stock in this environment?
Well, it depends which type of stocks. There are stocks that have very resilient top lines, that are very defensive. We could think of some of the consumer staples. There's been a lot of demand for food at home at the moment. Maybe some utilities around the world are fairly resilient businesses. We would argue we're in the Zooming world at the moment, and the Skyping world. We have a very large position in Microsoft. They own Skype that we're currently doing this interview on, and a lot of people have moved to working at home, and their productivity software is in very, very strong demand. And we would argue those type of businesses are going to prove to be very resilient in an economic downturn. We expect.
The only thing is, this is the first time I'm watching this, but the problem is that most investors and people like himself will be thinking the same way. So if everyone's rushing to buy Microsofts and Woolworths and Coles and other kind of stable businesses, then the price goes up, and that they really haven't pulled back. And maybe once the market's back on, money gets taken out of those and put into more speculative ones. Because just looking at today, for example, today is still 4th of May 2020. Afterpay, right? It's your payment provider has gone up in one day 23%. Like, okay, I haven't looked into it. We all know what Afterpay kind of is by now, but I mean 23% up, like in one day. So the fundamentals don't necessarily going to be reflected in the price. And the stock market as at 1:37 p.m. is currently about 0.84%. That's for ASX 200. That's after that Friday dip that we just had of 5%, which is a bit crazy. So, try have a stomach getting in or out of this market, shorting it, longing it, yet not easy.
Expect a business like McDonald's will prove to be resilient once people can get out of their houses. Again, but there are other businesses that are very dependent upon economic activity. And for those businesses, they're very hard to value at the moment because we just don't know what the next 5 years will look like. And you could have range in the revenue and earnings potential of some of those businesses at the moment. So it depends the type of business and how you could value. Some of them are very hard to value at the moment, and other businesses that are more resilient, you have a much better gauge. Because they're not as dependent. If we get a deep recession, they're still going to earn very, very good revenues.
The thing is, you got to understand that these people, himself, and I'm sure his team, are full-time sitting at desks and looking at the numbers and crunching numbers, trying to find that perfect investment. And yet somebody like me in front of the computer watching some of these videos and making their minds up and investing their cash is just mind-boggling. But that's what we have to do. Or you can just give your money to one of the funds and let them run it with the fee, which is also perfectly okay. No problems there. Elise is asking some of the very good questions. Oh, by the way, since I've borrowed all this content with my commentary, I definitely, sometimes I do forget, but I will link this interview in the description below so you can watch the whole thing uninterrupted. But yeah, good question. Next one also.
So then what do you make of the fact that the ASX is up around 20% from the lows that it hit in March? The Dow Jones is up 28%. The Nasdaq's up even more than that.
Yeah, well, first I'd say is this is a very large relief rally. It does.
Relief rally. What relief rally means, as far as I understand, is that when you have the the share market going down, and then there's a relief rally or a bull trap. In any case, that it just bounces off the bottom. Well, that might not be the final bottom anyway, so it's bounced off, and then it may end up, just following down even lower. That's as far as I understand.
It doesn't surprise us that markets have done this. I think the markets are not really pricing any downside risk at the moment. Obviously, we've had very large responses by the central banks and governments of unprecedented scale, but also we've seen around the world the flattening of the curve in terms of the healthcare, in terms of the spread of the virus. And as those curves are flattened with all this central bank and government support, people are feeling pretty happy we're going to get through this. I think people shouldn't get ahead of themselves. We don't know the economic damage at the moment, but there's this massive relief rally because there's been actually quite a lot of good news with the amount of support measured in the trillions of dollars.
Yeah, so this has all been pumped.
So it's that exuberance again, irresponsible exuberance or irrational exuberance. I keep struggling with that term. So Hamish is not convinced. I think it's fair to say that he's not convinced that this relief rally is something we should be jumping on. My favorite person also warns that this might not be the bottom, at least for now. Yeah, the bounce everyone's talking about is this. This is ASX 200 largest companies in Australia. So we had that pullback obviously at the end of February, and then it's gone strongly up. And as I try as an amateur, draw some of these trend lines and channel lines, it was, if it was to go back up, it would either broken this trend line up on the up, which would signal further revival of the market, or it seemed to have gone sideways and broken through this channel down onto the bears case, meaning that the case of market pulling back to new lows, or at least lower lows than we had. But I'm not going to pretend I know any of this enough to give advice. Instead, probably just see what Hamish had to say for the rest of the interview, just not the whole interview. Again, I'll post a link in the description.
Are we in for a bit of a reckoning on markets when we realise that most likely scenario, we're stuck with this COVID-19 for a long time to come and we are heading for a recession?
Look, I think it's inevitable as we start to get more companies reporting, and most companies have only reported their first 3 months of this year. They only had 1 month that was being affected, and even then the results haven't been very good. Wait till we start to get into the rest of this half of this financial year and we start to see the March through June figures. I think we're going to start to see a lot of damage to companies. And if we don't see when we're opening up economies that activity bounces back, of course, it's not going to be down 60%. But if it's still down 10%, that is a very, very big economic downturn. And if unemployment doesn't start to come back when we open the economies up and really people are tightening their belts, at that point, I think there could be a reality check.
You're in the fortunate position that you...
Well, there you have it. Again, there's more. I'll post a link in the description, but that is the opinion of one person, one very important person, managing a lot of other people's money. So we listen. And again, at the end of the day, we make up our own minds. That's it for now for this video. I'll probably create another one also today, as I have recouped some time and I have bandwidth to create some of these. Thanks for watching again, and talk to you soon. Bye for now.